Hello, everybody. Happy Thursday. It is Dallas Trading Floor, and my name is Jim Malone, and we're going to be going through some of the stocks that we're trading today. Big recession fears revived once again, unfortunately, but it does look like, it looks like we're going to go back to that kind of recession fears, and that is going to probably affect a lot of things. The market was just, devastated pretty much today. Really just pretty much of a wipeout in a lot of things. Of course, this is the reaction to the 75 basis point hike that happened just, basically just yesterday. And the reaction to it, basically almost everything is off today. Even some of the oil stocks are down. So it is just a tough market to trade right now. Let me show you the NASDAQ composite. This is definitely something that you should take a look at. Yesterday, we did have this rally above 11,000, but today, boy, I tell you, we just took it on the chin, and it just went another way. On the S&P 500, that also took a move down. As a matter of fact, all the indexes took a move down. So what I want to show you here is the fact that I think that we're starting to see. Well, I guess moved up a little bit. I think we're going to start to see the third leg down. Well, actually, this is the fourth leg down. We had the first leg down here. We had the relief rally. We had the second leg down, relief rally, third leg down, relief rally, and I do think that we're at the beginning of that fourth leg down, and I'm kind of predicting that we're going to see it come down possibly to as low as right about here. That's where I'm seeing it, kind of really at about 32.30 or so. That's kind of where I'm seeing it end up. So we've got a little bit of work to do on the downside, and I think it's just still going down there. So basically, the composite was down the NASDAQ composite was down about 4.2%. S&P 500 lost about 3.3%. The Dow Jones average was down about 2.5%. Small cap Russell, it was hit the most at 4.5%, but the volume rose on the NSE and NASDAQ. And basically, the reason that's significant is because when you have volume increasing to the downside, that is not a good thing. So I do think that we're going to probably take another leg down here, and it could be it could be a tough one. Here's kind of the sort of how it stacks out there. Of course, as we this is updated. The Russell, the IWM, that's the basically down 4.5%, a little bit more than 4.5%. So we're pretty much off on everything here. Just not really a great time to be long on anything. I'm basically only long one thing in the small portfolio, and that is the TBT. That is the index. That is the ETF that tracks the long bond. And of course, this one, as the long bond goes up in the interest rates go up on it, typically bonds will fall, but this is the inverse of that. So what this one does is that it goes the opposite. So as the interest rates go up, so too should the TBT. Now, I did sell part of my position yesterday, right before they got the announcement. Did that just and it did pull back, but I did buy some more because I do expect we're going to see this thing move a little bit higher. We're going to see the interest rates move. We're not done at all with any of the interest rates hikes. I just think we're going to be be going longer and harder. So what I've really done is I've switched my strategy really to a more cash strategy, and then also shorting strategy. These are the closing prices of the stocks that I am currently short. And I want to kind of give you a rundown on that. Of course, we're down on Netflix, we're down on Costco, we're down on Palo Alto Networks, we're down on Hershey, we're down on Nike, and we're down on Starbucks. We just entered the Starbucks trade today, and that, fortunately, at least from where I'm standing, that allowed us to kind of get some nice numbers in terms of the shorts. So let's kind of go through some of the shorts and show you kind of what's going on there. These are all bear put spreads. Some have been adjusted, some not. Let's first look at Netflix. That's NFLX, and of course that is short. Now we did, we did extend this one a little bit because it's been kind of, all over the place. It was up a little bit. The current short on this one is a 170, 175 short. So we're starting to be in the money here. We're starting just to be in the money because we were just moved below that 175 level. So we should hopefully see some good action on that. We did move it out a little bit. To the 20. I guess it's the 20. Yeah, we moved it. We moved it out to the 21st of June. So hopefully we'll get a little bit more drop here. That's one of the ones that it's starting to look good. It's underwater by about $13, not a lot, but I suspect as it drops into that range between 175 and 170, then I think we're gonna see it move lower. So and that will mean that we'll move higher on the day. Also, Hershey, that's the one that I did put out some of the videos on, and that one is HSY, which is the symbol for Hershey. This one also is a bear put spread, and as you can see, Hershey is starting to move down now. Hershey has gone to the bottom of the consolidation. It's right at 201. So hopefully it won't bounce here too much because the short on this one on Hershey is a 210 200. So we're right basically at that. So we will see if it reverses or not, or if it holds there. Looking at 30-minute chart, it does look like there is some downward pressure on that. I'm going to be watching that one very closely. We may be closing that one early because it may bounce at the level of the it may bounce at that 200 level. Currently it's at 201, so we will see. But probably I think this one is likely to go lower. It just has a lot of weakness, and we will see. We will see what happens there. But we're going to be watching that one pretty closely tomorrow to see if that will work. Also, I'm short on Nike. This is also a bear put spread. NKE, of course, is the symbol for Nike. Let's take a look. And Nike is continuing its march lower. It was off about a little bit over 5.5% today. So currently it bounced a little bit. It's at 107. Fortunately, on this one, we're starting to get down to the right area here. The short on the spread on this was 115. 120, so that if this stays below 115, we're going to do very well. This has been increasing nicely. It's up about $335 on this spread. So we're going to probably hold it for a little bit of time and see where it's going there. Palo Alto Networks. Also, this is when we just entered this one. PANW, of course, is the symbol on this one. This one has a little bit of bounce at the after hours, but it's still in a downward trend. So you can see this is where we shorted it, and then boom, it started to move lower. It did bounce a little bit, but it's off generally speaking. This is as long as this stays below your 470 level, which it is, it's at 468, then that one should shape up pretty nicely as well. That one is up about $39. As this moves closer to expiry, which of course is on the 15th of July, this will increase in value. Now, two of them, one that we did enter today, Starbucks, SBUX. This one is just starting to turn, and I do kind of expect it to be, hopefully pretty good. This is we did short this one right here, and we went a little bit lower. This is a 70. This is a 75.70, and of course, anything that's below 75 is going to pay. We're at 71.04, so that's looking pretty decent there too. Even though we just opened this one, so we're still a little bit. We're off $5, but I suspect that this will move to the positive side as the stock moves to the negative side. And of course, the last one we have is Costco. Now, we did extend Costco out quite a bit because it was not working as well as we would have liked. That's one of the great things about doing these spreads is that you can, if you aren't quite right, you can adjust them out and make them work. So that's the case here. As long as you're in the right general direction, and we rallied up. We probably here the problem is we really didn't enter this correctly. We should have waited until it came up to the 21-day line, but we fixed that problem by moving the spread up and out, and now we're moving down. So that's looking fairly good, and I think we'll get some nice numbers on that one as well. So that's kind of the situation. Mostly short out there, and looking to get into that's sort of been the way. So let's kind of take a look at some of the the shorts and see if we can show you each one that I went through very quickly here. So let's look at the shorts that we've got. Again, this shows you the short on Starbucks, and as again we just opened it today. We're basically according to this chart, we're basically right at about $5 into the negative, but we just opened it. The amount of net debit on this one, 522. The fair price on this one is 527 currently, and so hopefully as it moves into the future, it should increase in the value. This one has a potential profit of $478 if the stock is below $70 by the 15th of July. All right, so let's kind of take a look. Several ones that we've closed. We did close the American Express trade. We closed that one. Basically, we made about $890 on that one. That was a pretty nice little trade as well. American Express really pulled down low, and we were able to get a nice move on that one. So that did pretty well. We also did do a second bear put spread on Disney. That one, 464 made on that one. So currently we have 6 of these trades open, and we were going to be looking for more opportunities because I do believe that we are probably headed lower, and this is a way that you can profit from that. So kind of perverse, but that's how it is. Any watch list for shorting? Well, I'm going to be putting together one. I'm going through a lot of different. Different scenarios. There's about 1,400 charts that I'm going to be looking at. Hopefully, I'll get a good list together. I'm going to be probably putting that out first, of course, to everybody that's on the that's on the Discord room. That's sort of where we put a lot of our we kind of premiere a lot of stuff there. So if you're interested in that, we're going to probably be putting that out on the Discord room first, and then we'll share with you after after we get some fills. But to find out more about that, just go to www.Dallas Trading Floor. So it's kind of the situation there. All right, let's see if we get another question. Thank you very, very much. Thanks, Lisa. I was a pretty good day today. I had a pretty good day. The shorts are looking pretty decent, and we've been able to make some good progress there. So hopefully we're going to find some more to do, because that's all the thing is working right now in the market. It's not a good time to be long just about anything. Most of my longs have just not done well. The only one I'm really long is the TBT, and that's pulled back a little bit. Of course, that's an inverse, so it's a little bit different situation there. But shorts are doing well, and but I do think that we're likely to see another 20% drop on the S&P, if you can believe that. So that's kind of when I think what's going to happen. All right, quick look at Exxon Mobil. Very good question there, because I am looking for an entry on Exxon Mobil, XOM. Right now in this market, until we get a little bit of a relief, I'm even on the best one, I'm not looking to go long. It's just it's just a tough market to go long on right now because it's just so negative out there. There's by going to cash, it's a problem. I mean, you're not like a hedge fund or anything like that. Going to cash makes a lot of sense in this market if you can't find the right thing. Now, in a market like this, your entries have to be much, much better than they would be normally. It's just one of those things. One of the things, though, great things about ExxonMobil, and I think ExxonMobil is looking far better than Chevron is. Now, I sold my position in Chevron. I had four full positions in Chevron. I did sell it, made a little bit of profit. Not, I didn't hold it all that long, about 2 weeks. This one may be setting up. ExxonMobil may be setting up now. This stock is going to benefit. I mean, there is a little bit of concern though here. I'm looking at the volume and I'm seeing some selling action that's higher than normal. This red line here is this is an exponential chart. So anything over this is a lot of selling. So I'm seeing a fair uptick in selling. We were moving down, and now I'm seeing an uptick in selling. So I'm wondering if we're going to get a reversal on this one. I'm not ready to buy this one yet. I want to buy it as it moves higher. Currently, we're at about 91 on the 30-minute chart, 91 bucks, and then so if we get a little bit of movement here, then I would be interested. But right now, with the market being such, right now we're in a correction right now. It's tough to buy anything in a correction. By the way, I want to show you on my slides. If you ever look at the slides, I always put a little. I always put an indicator on what the market is doing. Right now, it's on a red. That means market in correction. There's 3 states here. There is the green state, of course, that's in a confirmed uptrend. The yellow circle, that means uptrend is under pressure, and the red, which means that currently we are in a correction, and it's very, very hard to buy in a correction. Really, the only thing you can do in a correction, I believe, is to go to cash or short. And the way I like to short, of course, is with the bear put spreads. Why? Because it's a limited risk short. Now, shorting is more difficult than going long. Why? Because the one thing about when market is in decline, it pulls down faster, but it also rallies faster. So some of the biggest rallies that you're going to find are when the market is in decline. I know that doesn't make a lot of sense, but as the market pulls down, it pulls down much faster than it moves up. But one of the things is that every once in a while you'll get these reversals, or these sell-offs. These reversals where the stock will move higher. Mainly the reason is, of course, that's a short cover. And so that's why I don't like to short directly. I'd rather short with options using a bear put spread where it's a limited risk. It's a limited risk scenario. So that's kind of why I like to do those. Bear market without recession. Oh, I think we're in recession. I think we're going to be in recession. I think we're already in one. I think the recession actually started, and usually you can't figure it out until recession has been going on for a while. But I think the recession actually started in November of 2021. And the reason I think that, let's take a look at the Nasdaq composite, because Nasdaq is where all of the growth stocks live. And I'm going to go over to the monthly chart here on the Nasdaq and show you why I believe that the recession actually started. It actually started in November of last year, and we didn't really know it, because you never know it until it's really there. But if you draw that line, you can see that line there. You can see, yeah, there we go. You can see that in 2021, it's in the last month of that. And that last month, of course, was starting in November. So this has been the trend since November of 2021. And relative strength line here, this RS, is moving down. So, and also you'll notice that the selling volume is also, you see there's more red bars than there's blue bars here. This is the monthly chart. So it means we've been having 1, 2, 3, 1, 2, 3, and then up month 1, 2, 3. So we've had over a period of 6, 7 months, we've had only 1 month that has been an up month in terms of selling. So it's been a sell-off essentially since November of 2021. So we were truly, I believe, right now, and we have been in a recession since November of 2021. Now, the question is, how low can you go? Well, here's the thing, here's the thing. If this had been normal, we should have bounced. Basically, we should have bounced here at the 200-day moving average, but we didn't. It fell through. So we have a situation now where if it can't get support, it could go a lot lower, and it could go a lot lower. So this is why I think that we're going to see another about 20% drop. Now, this is of course the Nasdaq. If we go over to the S&P, that's a little bit different. That's a little bit different. But if you look at the S&P, essentially it's similar in that the last, if we put the thing on again, almost exactly the same period of time, November of 2021. That's when it started to fail. It went down to the 21-day line. Now, if we had support in May, I wouldn't be so concerned, but we didn't. It fell through that, and currently, for the month, we are down, and we are at the bottom of the trend. So if you look at the weekly chart on the S&P, you'll see that indeed we have lost support at that critical 200-day moving average, and we lost that support. So when you lose that support, that means it's probably due to go down another time. And on the S&P, I'm looking at a fourth leg down, this being from November. This is the first leg down. Was a rally, second leg down, rally, third leg down, rally, and then we just started the fourth leg down, and I believe we're going to go down to right about here, about 3200 on the S&P 500. So I think we have another about at least 10%, 15% to go down before we're gonna be good. It may go lower than that, but I definitely think that we've already started this decline. I'm looking at about 20% below the bottom, which the bottom on the last leg down was 31.10, and so I'm looking at it going. I'm sorry, the last leg down was 38.10. Excuse me. So the next leg down should be about 20% of that, or I believe about another 600 points, and that would get us to about 3,200. That's kind of where I'm making my stand there. I think that's going to be kind of close to where it's going to be. All right, SDS SQQQ. Wait for a better time to enter. Yes, the thing about the QQQ, the SQQQ, it's a great. The time to have bought the SQQQ was right before the announcement, Powell's announcement. Why? Because the QQQ, the SQQQ, is made up of derivatives. It tends to move very quickly initially, and then not so much. So it was up. It was basically yesterday, right before Powell's announcement, it was down. And then when it confirmed that we're gonna have a bad number, it popped up. So probably it's too late to enter that. It's still, because we're the correct buy point on that one would have been about 51. It's currently at 65. I mean, you could enter it here, but it's not going to get. You're going to increase your risk because it is extended. So I wouldn't probably do it at this level. Just me. Let's look at SDS as well. SDS, and see what we can see there. And that's also the similar idea. This is ultra short pro shares for the S&P. These are all essentially similar instruments. These are essentially similar instruments, and they're going to react the same. They're just different companies that do it. I mean, ProShares are Invesco. They're both big companies, but they have families of ETFs. So they're going to sort of be the similar thing. I still think that we're a little bit extended here. I'd be a little bit concerned. I kind of want to wait for it to pull back, possibly to about 51 before I would do it. We're currently at 53. I think it's too extended. That's just my opinion, and but I think that's going to be kind of the situation. Can you look at DVN? Let's do that. Absolutely. DVN. And see. Devon Energy. This was a great company. It still is. It's just I think it's it's a little bit constrained right now. It still has the relative strength of 99, which is excellent. This one did fall through the 50-day line, so that's a little bit concerning. We may get a bounce on it. Actually, buying this off a bounce wouldn't be a bad idea. I would consider that if we weren't in a correction. The problem right now, I would really like to do something like that, but we're in a correction in the market, so it's just so difficult. I don't like to buy anything really long in a correction. It's just just very tough. I do have two stocks that are holding in there. I'm not increasing the positions on them, and that's of course Shell and BP. But everything else I'm short or in cash. So I just don't know if this would be a good idea. Normally I would go for this because I think it would reverse, but I'm just this market is a little tough. I mean, I don't think that you can't go big really in this market because it's just too volatile. When is the best time to take profits on this in the spread time? I look at profits today on PanW. Great. Okay, let's take a look, Lisa. I'm going to jump back over to the kind of we're going to jump back over to the screen here. We can kind of take a look to see kind of how we're doing on PanW, which is of course that's Palo Alto Networks. So let's pull up that chart, and we're going to go over here to Palo Alto Networks. Okay, now typically I like to take profits relatively early, but right now the trend is pretty good. We're currently at $39 here. I want to kind of wait a little bit. I want to see if this thing, right now we're in green zone, so I'm not really in a hurry to close this one out. I kind of want to wait, and if you can see, the longer I wait, the better it gets. If it goes lower, you see it's going to get to the full maximum, the full maximum gain quicker. Currently, the maximum gain on this particular trade, the way I have it structured, is about $540. But if you can get at least 60% of that, that's a good place to be. So if you look at this chart, and it's kind of tough to see it probably on the screen, but it's a little bit darker green down here. That's sort of kind of where you want to start taking it. You want to go for the lighter green, and then as it moves next to that darker green, that's kind of where you want to start looking at it. So right now, if I were in this scenario, I would basically I would start taking this. I would wait until we were down here a little bit further down. If, for instance, if Palo Alto Networks fell, if it fell basically to about 402, then I would consider definitely taking the profit there. I mean, if we got a fall off. Other than that, I want to stay in the trade until I can get at least 60% typically of the potential. The potential on this one is if we wait all the way to the end, the potential on this one is 475.40. That's the break even, but the potential profit on this one is the potential profit on this one is anything below 475. We're going to be making all the money, and so I want to take 60% of the potential. The potential profit. The potential profit on this one, 540. So we're looking at about what? About when it gets into the $300 or more range, that's where you want to start really looking at potentially closing the trade. But right now, I'm going to say open on the Palo Alto Networks trade, just because I think that I can get more profit out of it. So that's what I'm going to try to do. Jimmy, have you seen the midterm election? Your pattern charts that would compare. That's interesting. To more. Okay, that's very interesting, Derek. I'm going to try to look at that. That's a very good. That's an interesting answer. That's an interesting answer. So I'm going to try to put together something on that. Can't get to it right now, but definitely very interesting on the midterms. That's a good idea. That's a very, very good idea. I really like it. All right, let's take a look at BA. Of course, that's Boeing. That's Boeing, and let's kind of see. I think Boeing is making a turn right now, so I'm not as interested in jumping in because I think it's lost. I think it's going to start making a turn. I'm pretty sure of it. Let's take a look instead at Boeing. So I'm not as interested. I was shorting this earlier. I had a pretty successful short on this one, but I haven't been in it now because you see we've rallied up to the 21-day line. I really think that. Yeah, this is how I shorted it initially. I shorted it back here on the 27th of April. We closed it on the 25th of May. That was just almost 28 days. And we went from there to basically there. Then I closed it when I saw this up, when I saw it move up close to the 10-day line. That's where I closed it. It accelerated above the 10-day line. Now it's below the 10-day line, and it's come up again to the 10-day line. Now, if you did want to short it, and I'm not so sure this is a good place to short it, I would wait to see if it closes below the 21-day line. Now, currently, the 21-day line. Let me see if I can get it here. A little bit of slow throughput here. Yeah, there we go. So the 21-day line currently is at a 132. So if it dropped below about 132, that's where I would consider possibly shorting it. But I don't, that's where I would consider possibly shorting it. Currently, it's at 133.86. I want to see some weakness here because it moved up to the 21-day line, and then it looks like it's faltering a little bit. Now, one thing it does concern me a little bit here. The relative strength line is 24, which means that it's gaining relative strength. So I want to always be shorting on relative strength that's lower, that's moving lower. So here's my take, at least for right now, on Boeing. Oops, on Boeing. I'm not ready to short BA right now. And that's really just because I think that it's not. I want to see it firm up a little bit before it shorts. Now, I learned something very interesting today. If you're a user of Thinkorswim, I don't know if you are. I happen to have an account at TD Ameritrade, and I don't know if I can show this to you, but if you want to invert it, sometimes it's easier to see shorts if the chart itself is inverted. And you can do that on the Thinkorswim platform by going, and instead of putting in BA for Boeing, you put in minus BA, and it gives you an upside down chart. And if you have an upside down chart, sometimes it's easier to identify shorting points. Now I'm gonna probably be talking about this a little bit more. I want to develop this a little bit more, but I think this might be a good way to find in the kind of strange market that we're in, to find good opportunities to short. I mean, that's really the long and the short of it. Let's take a look again at the small portfolio. This is the only portfolio. This is the only thing that I have currently, and you can see it's really small, mostly cash here, and I just have a small sliver of the TBT. We're up on it. I mean, we did lighten the position up a little bit. We are up on it. We've held it for about 17 days. We're up. We're up about. I guess it's about 2.86%. Just doesn't pay really to go long right now. I mean, this one, of course, is a little bit different because it's that inverse long bond ETF. But still, I'm just very, very light when it comes to positions, mostly short. And, that's sort of been my take on that. That's sort of been my take on it for at least right now. Until I can get a better read on, on this market, I'm going to be short or in cash primarily. All right, let's look at grocery. This is an interesting one that Lisa's bringing up here. Grocery outlet. I used to live in Monterey, California, and there was a great grocery outlet in a place called Marina. And I used to like to go over there. Just a little anecdotal. Something a little anecdotal. Let's see if we can get grocery outlet. I think it's GO. It's a symbol for grocery outlet. I'm trying to get it to pull up that chart as we speak. Let's see. No. Yeah, grocery outlet. There we go. So it did work. So that's a good thing. Grocery outlet actually is looking, you're right, Lisa, grocery outlet is looking really, really good. Look at this volume. We have some incredible buying coming in here. This by the way, this is an exponential chart. So this isn't just 50% or 100% more. This is like 500% more. So something's definitely going on. We definitely bounced off that 21-day line. Now, grocery outlet's pretty interesting. They actually are a company that they buy grocery dented can stuff from other groceries and then they resell them. So it's kind of like a combination. If you've ever been in one, it's very interesting. It's kind of like a combination of grocery store and thrift store for dented cans from other grocery stores. So it's a very odd company, but I'm sure they're going to do well in this environment because, and definitely showing it. I'm looking at the fundamentals here. Their sales were up. Their sales were up 10%, but they're still losing money, as you can see. And this does concern me. And now something's going on. Somebody's probably going to buy them, but I'm looking at the fundamentals here, and I'm seeing negative. I'm seeing some red ink. I'm also seeing that. Well, if you look at their return on equity, it's incredible. 9% in the grocery business is phenomenal. So I don't really know what's going on here. Definitely want to watch this one because it seems to be bucking the trend. I mean, this might be one of the only areas of the market that's doing really well. This has what they call the golden cross, which is basically when the 40-day line moves above that 200-day line, and that's showing a lot of strength. And you're right. I mean, there's a lot of strength in this issue. I wouldn't buy it right now just based on the market, just because it's a weird market, but it's looking very, very good. All right, let's take some questions from TikTok. Making sure that okay, let's see. Disney was a wreck. Yeah, it was. We had a very nice short on Disney. Let's jump on over to Disney and just show you where I shorted that one. And okay, come on, Disney. I had a short on Disney for quite a while. I thought I was too early. But yeah, it's just as you can see on the daily. Let's see, I think I have the notations on the weekly chart. Let me just check here. Come on. Yep, there we go. All right, so here's what I did with Disney. I did close the. Let's go back over to the daily chart, and that will show us where we entered and exited. Okay, so okay. All right, so hopefully here in a second, it will come up with the chart. There we go. All right, so basically what I did with Disney is I shorted it initially. I closed the short, and then I got another opportunity when it rallied to that 10-day line. Then I wrote it down, and then we closed the short on this one on the 13th. So just 3 days ago on that one is when we closed it. We did very, very nicely on this one. It came up to the 21-day line. and then collapsed, and then we got out of it right as it started to make its bottom. I do think that Disney may give us another opportunity for a short, but the problem is you do 1, 2, and then the third one, it's not as likely. So I think this is going to start to bottom here. But if it rallies to the 21-day line, we may not have another opportunity to short Disney again. So we've shorted it twice. We've made money both times, but I just don't want to press my luck. Have you looked? This is a question from. Have you looked at ARVL? Let's look. I want to look at this. This is for TikTok here. ARVL. Look at that stock. And that is Arrival makes electric vehicles. Okay. Here's the thing. I'm not trying to chide anyone. But I just don't think this is going to work here. This has a relative strength of 1. And what that means, everybody, is that this 99% of the stock market is stronger than this stock. This is a relative strength of 1. What you always want to try to do is you want to try to buy the stocks that have the highest relative strength in the best categories. And currently, this is a terrible relative strength in a terrible category. So I would just have to say no on this one. It's just not the thing to do. Just keep on tuning into my show. Go over to the YouTube channel. I'll show you, in more in detail about why you don't want to buy this one. This is terrible, and it's just not where you want to be. I know it's in electric vehicles. That's a hot area, obviously. In 2021, I did great in Tesla. I'm totally out of Tesla. Right now we're in a downward trend. You don't want to be long Tesla. You don't want to be long electric cars right now for a lot of reasons. I mean, that may change, but right now, just don't want to be in it. And so this Arrival company, I think it's DOA. I think it's dead on arrival. So that's what I think about it. All right, let's look at Walmart. WMT, of course, this is the biggest retailer in the world, and this is really they've been struggling. I mean, and the thing is, if Walmart or Target struggles, you got to take notice, because these guys are the best of the best. These are the best retailers in the world. Walmart is the best retailer there is currently. I think they're just absolutely the best retailer. Their execution is the best. Their analytics are the best. And look at their stock. It's not doing well. This is trending downwards. What does this say? This says that the American consumer right now is feeling the pinch. They're cutting back. They can't spend anymore. Gasoline is killing them, and it's just not looking good. So, would I buy Walmart here? I don't think so. And I like Walmart. I shop there. I mean, I go there all the time. They have great specials, obviously. But if you look at this chart, it's not a good chart. It looks as if, we had this leg down. We're looking at the weekly chart here. We had this leg down, and then this is a reverse flag kind of thing. This is actually a very good shorting pattern. But it pulled down, and then it's sort of hovering here at 120. This thing actually may go lower, and that would be amazing, because, again, I mean, Walmart is one of the best run companies in the world, bar none, and yet they're having trouble, and they lost the 200-day line. So it's normally, if we're in an uptrend, if we're in an uptrend, it's going to be coming up, and it's going to be bouncing off of that 200-day moving average. Is going to bounce there, bounce there, bounce there, bounce there. But when it loses traction, and that's what's happened here, this may signal, and I do believe this is signaling a change in direction. And if we pull lower than this, and it does look like that, this may be a short. And even Walmart. Now, in a downtrending market, all of the stocks eventually roll over. They all roll over. And so you can't depend on any of the longs. Looking at the fundamentals on Walmart, their sales were up just 2%. Well, for them, that's a ton of money, because it's so big. But and this is the key, their profits were down. This is the last quarter. This is the April quarter that they just announced recently. They were down. So this does not bode well for the American consumer. So Walmart, would I buy it here? No. I would even consider potentially shorting it, but I'm not ready to do that yet because I'm still, shorting Walmart is like shorting the entire retail sector. Because it's that important to stock. So I would be very, very careful with Walmart here. It could go either way. I do think though it's probably going to go lower. Now, is it going to fall out of the sky? Is it going to go bankrupt like some of these, like Coinbase, which I do think is going to go bankrupt, by the way. I don't have any inside information, but I do think it is going to go bankrupt. Walmart's not going bankrupt, okay, but their sales are going to be lower. And that's just a fact. And that's just a fact. So this is signaling recession. And I'm not an economist, but this is signaling recession. If Walmart can't hold up, then the retail sector is weak by definition. So I wouldn't be a buyer. Okay. How low can Tesla go? I think it can go a lot lower, to be honest with you. I love Tesla, great car, great company, great leadership, but it's got a ton of overhead supply and it is not looking as strong as it was, obviously, because people just don't have the money to buy them. That's the problem. I mean, people are going to be holding on to their cars longer, it may be a good idea to stock up on canned goods, as I was saying about one of my office mates here. Because this is just not looking good. Currently, it's at 637. Let's see what the last pivot was on this one, on the pattern rack. The last pivot on this one was, believe it or not, 1201, and the one below that, the one before that, 900. So I actually, in my line in the sand was 680. I think this one's likely to go below. I think it's likely to be in the 500 range. If it can't hold that, it's likely to go down even more. So unfortunately, even though we're seeing some really nice sales here, some nice sales number, and some nice profit numbers, it's not going to be enough in this market. So it's just not a good time, unfortunately. It's just, it's one of those things. All right, let's look. Oh, this is interesting. Okay, this is from Finance Fund. Finance Fund. Having fun with somebody else's finances. Okay, let's look at this. NVN. I don't know this. I don't know the symbol. XF. Let me see if anything comes up here. It say it's not recognized. Well, maybe it's just NVN. Yeah, we definitely have something for NVN. That's a medical company. Oh, I think you have two symbols. All righty. I think that's what we're talking about. So I'll do the based on that. Okay. This one, Enviromedical Corp in Irvine, California, sells biological tissue. That's kind of bad. So biological tissue sounds like they're grave robbers. I don't think this one's very good. I mean, I wouldn't want to be in this one. This is, by the way, this is the first thing you do when you look at a stock to buy. You look to see how it's trending. It's trending down, so you just eliminate it. I don't even look at the ones that have charts like this, just because they typically are not good. Not good. All right, we're getting towards the end. Let's go with WDS from Jose. Thank you very much, Jose. And WDS. And let's look at that to see if there's anything there. Woodside Energy. All right, well, we're sort of in the right area. Oil and Gas International. I like that. Now, this is just relative. This is new. This has just come out. This is an IPO. Interesting. Not a lot of IPOs out there. And it's looking like it is off a little bit in after hours. It came out, Australian-based company, expert direction of oil and gas. Okay, well, this is interesting. I'm not familiar with this company. Brand new. It's an ADR, American Depository Receipt. That means it's actually traded in Australia, but you can buy it in New York with American Depository Receipts. Very interesting. What do I think of this? Too early. I would not be a buyer of this one. I just wouldn't be. There's just not enough track record there. Not in this market. We're in a correction market. Correction market. You just don't want to do that kind of thing. All right. Last question. What do you think about Meta? And of course, Meta was Facebook, and they did change their ticker to Meta. And so the question is, how are they doing? Would you buy them? And let's take a look. This is just a tough market all over, but in this market, it's just not a good time for Meta. Now, I did have an iron condor. I did an iron condor on it. I did relatively well, but the trend of Facebook or Meta is down. So just not something you want to see. Relative strength 19, and we have the death cross there. So yeah, in this kind of environment, no. You can see this is forming a shorting pattern. It's come down, and then it's slowly been going sideways like that. This is a pattern when you're looking for a short that can be good. It'll drop precipitously, and then it'll try to hang on to it, and then it usually will come up to an index line, and then drop. So this could be potentially a short, but I'm not doing anything like that right now. All right, everybody, thanks, and I hope I'll be back tomorrow at 5 o'clock. Thanks for taking a look at the show. If you're interested in getting on to, by the way, if I could implore you to like the show, that really helps us out a lot. So please like Dallas Trading Floor. Please like that. Also subscribe to the YouTube channel if you can. Now, to get onto the action trade alerts, and this is our email service. It's free, by the way. Easy to do. Just go to www.Dallas Trading Floor. Now, if you're looking on TikTok, just go to the profile and click on the link, first and last name, and an email address, and we'll get you all set up on that. So until tomorrow at 5, everybody, happy trading. Be careful. We're in a market in correction. You want to be mostly in cash or potentially short. You don't want to be long pretty much anything right now in the market. So right now, if you're in cash waiting to be invested, that is not a bad strategy. That is not a bad strategy in this market. I suspect that we're going to have another about 20% pullback in the S&P. So be very, very careful in this environment. Don't commit to very large positions, and just be very, very careful. It will turn, and when everyone gets totally wiped out and everyone is crying the blues, we're going to see another rally, and that's going to be some tremendous opportunities. But right now, we're in a market in correction. You need to be in cash, and I'll be back tomorrow at 5. Happy trading, everybody.